Welcome to the weekly market wrap-up. I'm Hannah Bernard. The bulls stormed Wall Street Thursday as oil prices jumped and traders made moves in anticipation of a positive jobs report due out later today. How good is the news? Let's find out. Oil drove big gains on Thursday and turned U.S. indices into the green for 2015. The price for a barrel of crude recovered on Thursday to settle above $50 a barrel with gains of nearly 4%. This after closing down almost 9% on Wednesday. The bump seems to have cemented some consensus amongst analysts that the price of oil is finally stabilizing. Surging oil prices led the Dow Jones Industrial Average to bounce back Thursday after experiencing a two-day rout, gaining 211 points to close at 17,884. The S&P 500 also spiked, jumping 21 points, up just over 1% to close at 2,062. And the Nasdaq also climbed its way into the green for 2015 with a 48-point gain to close Thursday at 4,765. Now let's turn to some great news for Canadian investors, as both the TSX and the TSX Venture Exchange had stellar weeks. The Toronto Stock Exchange simply turned in a great week as energy and mining stocks rebounded 1.9% and 2.6% respectively. The TSX gained nearly 600 points in the last 5 days of trading, closing up 129 points on Thursday alone to 15,124. Now, for the first time in a long time, we can report the TSX Venture Exchange had an amazing week. Just look at this chart, up, 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 as the TSX Venture gained nearly 30 points over the last 5 days of trading to close Thursday at 693.93. Breaking news late Thursday had Radio Shack filing for bankruptcy protection in Delaware District Court. However, the move does not mean the iconic electronics retailer is going anywhere. Sprint and hedge fund Standard General, Radio Shack's lender and largest shareholder, are buying as many as 2,400 of the Radio Shack stores. Sprint said in a statement that it would operate a store within a Radio Shack store, selling mobile devices across Sprint's product portfolio, as well as traditional Radio Shack products, services, and accessories. So bottom line, yesterday's move allows the company to clear off debt and liquidate underperforming stores. Google and Twitter struck what some call a gigantic deal this week. The two tech behemoths have reached a pact for tweets to start appearing in Google search results, starting sometime mid this year. Google will have direct access to Twitter's Firehose, the stream of data generated by the microblogging service's 284 million users. Google believes its search results will be enhanced by access to real-time tweets, and Twitter is hoping to reach more non-users, thus growing its audience, which would lead to increased advertising revenue. And now to winners and losers in our picks for the week. The winner for this week is Sony Corporation, ticker symbol SNE. Shares of Sony surged 11% on Wednesday to post their biggest daily gain in 9 years, after the Japanese consumer electronics and entertainment group raised its full-year forecast to signal the worst of its troubles may be over. Backed by cost cuts and stronger sales of sensors and video games, Sony on Wednesday trimmed its net loss forecast for the year through end March and said it will post a full-year operating profit instead of a loss. The loser for this week is Staples Inc., ticker symbol SPLS. Staples shares plummeted 12% on Wednesday on news the office supplies retailer had inked a deal to buy Office Depot for $6.3 billion. Staples is number 1 and Office Depot is number 2 in the category. By joining forces, the two hope to better compete against big box stores and online rivals like Amazon. This is the second attempt at a merger. The first deal was in 1996 and it was derailed by an anti-competition lawsuit. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to Baystreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is Lowe's Corp with an EPS forecast of 53 cents compared to 92 cents in the prior year quarter. Next up on Wednesday is Cisco Systems Inc. with an EPS forecast of 45 cents compared to 42 cents in the prior year quarter. Finally, on Thursday is CBS with an EPS forecast of $1.08 compared to $1.15 in the prior year quarter. The iNetwork signed a contract with the NFL last month, a deal securing television rights to Thursday night football games. Here are 3 Canadian stocks to watch next week. First up on Monday is Husky Energy Inc. with an EPS forecast of 26 cents compared to 42 cents in the prior year quarter. Next up on Wednesday is ARC Resources Limited with an EPS forecast of 20 cents compared to 4 cents in the prior year quarter. Finally, on Thursday is Teck Resources Limited with an EPS forecast of 22 cents compared to 40 cents in the prior year quarter. Last month, Teck was recognized as one of Global 100's most sustainable corporations for the 3rd consecutive year. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Val Network News and Baystreet.ca, I'm Hannah Bernard.